But for the answers, we're going to be looking out for our experts to answer the same. And with this, let me welcome on board onto the technical side. We are being joined by Rajesh Palviya, and to help us fundamentally in what's all happening in the global markets, Ajay Bagga will be guiding us. Very good afternoon to both of you gentlemen, and thank you for your time to ET Now. Rajesh, I'll come to you first because 19,500 was briefly seen on the Nifty 50 index. So going ahead with the earnings season kicking in and coming in at play, can we expect 20,000? We are not that far from those levels, but with the kind of a U-turn that we have seen on Friday, what's your expectation?
Good afternoon, Srishti. So this is the fourth consecutive month where we are seeing very strong rally is playing out in the market, and looking at the data setup overall behavior of the market, it clearly indicates yes, we may see furthermore upside from the current level, and possibly yes, Nifty can head further higher towards 20,000 mark also. Looking at the data setup, especially in today's session, some profit taking was there at higher level because most of the call writers were aggressive at 19,600, 500 strike on the call side, and so it clearly creates some pressure on the index. And Bank Nifty is having major concentration at around 45,500, which acted as a supply zone for the Bank Nifty also. But looking at the overall setup, we expect that if Nifty manages to hold above 19,200, 19,300, then this rally will again resume in the coming week, and possibly once we crosses above 19,500, 550 zone, then we can see a short covering action, and then Nifty can inch up further higher towards 19,800 to 20,000 mark also. So some consolidation we can expect, but yes, the kind of setup we are seeing across the board, it clearly indicates that this really can extend further, and possibly yes, we may see a 20,000 level also in the continuation of this uptrend.
Right, extremely bullish coming in from Rajesh Palviya, but let me quickly move to Ajay. Ajay, talk to us. There's going to be the IT pack declaring earnings for Q1 FY24. How are you looking at earnings? Will it beat estimates, the consensus estimates, and will it also be followed by some upgrades, downgrades? How are you looking at it?
Yeah, Harsh, overall, it's a strong earnings season. The decliners will be metals and cement. They will see year-on-year very sharp earning corrections. Metals, especially more than a 50% fall from first quarter last year. But we are expecting really strong numbers from auto. Auto will have an order of magnitude upwards, many times better numbers. You will have nearly a 40% jump in the financial side, mostly for the private sector banks and the consumer-facing NBFCs, the housing finance NBFCs. You will have very good numbers there. Chemicals will disappoint again, and the stocks have been reflecting that. It's a broad spectrum, but we are expecting softish numbers. And IT and pharma, we see a year-on-year growth. But the management commentary might be soft, especially in IT. Given the global macro backdrop, we are expecting the orders to have slowed down, and the hikes taken to retain employees over the last 1 year, those have reduced the margin. So toppish or flattish margins and not very good order flows, weak guidance is what we are expecting on IT, even though the rupee numbers will look good year on year. Overall, we are expecting a good earnings season for the Nifty and the broader market. The real estate companies obviously will do very well. Capital goods, industrials should do well. And the electronic manufacturing, which has taken a lot of interest over the last 2 weeks, we have seen a lot of brokerages now coming out with EMS-based reports. I think there, again, the valuations have run up, as have defense and railway stocks. That's why we have seen a hiatus there. So you could see good numbers, but it's discounted, it's in the price. So a very little surprise. Overall, a good, strong earnings season ahead. Metals and cement are expected to be the laggards.
Right. Let me take it over to Rajesh. Rajesh, the other big piece that's going to make news next week is going to be HDFC Bank merger, right? Let's talk a bit about it in the run up to that. Now, you know, over the last couple of weeks, it's been a brilliant move that HDFC Bank has made. Over, 2 weeks back, it gained around 6% or so till the coming Tuesday, after which it has actually lost around 3 odd percent. So the net gain over the last couple of weeks is just maybe 1.5% after that stellar move we saw last week. So in the run up to the merger, what should one expect? And post the merger, what should one expect in your view?
So Harsh, HDFC Bank is struggling to cross its multiple supply zone, which is almost near to 1720, 1730 zone, which is very crucial for HDFC Bank on the higher side. Once these levels are taken out, then this rally can extend further higher towards 1800 to 1840 on the higher side. So looking at the overall setup, we still holding our bullish view as overall long-term setup for HDFC Bank is on the bullish side. Short-term, medium-term setup is also on the bullish side. Some profit taking is happening at higher level, but still stock is holding above all its short to medium term moving averages. So we hold our bullish view, and if you get any chance to buy this stock near to 1620, 1600, it's a good opportunity again to re this stock in the decline. And your stop losses should be around 1580. So we are bullish, and once the stock crosses above 1720, this really can extend towards 1830, 1840 zone.
That's the take on the banking majors, HDFC Limited as well as HDFC Bank. Rajesh continues to be bullish. But onto the bullish side, Ajay, what a stellar listing it has been for Idea Forge IPO, 94% premium. But coming the next week, we have two more listing, that is Senco IPO as well as Sign DLM. Both of these have seen subscriptions of over 70 times. So do you expect the rush to continue? Do you expect the frenzy that is, do you see this as a frenzy? Because what we are seeing is that the FIIs are kicking in, getting the money back, as well as the IPO market is seeing such a great subscription as well as the listing. So what's your outlook onto the IPO world, and specifically from these listings, any expectation?
Yeah, Shrishti, if you look at the year has been very poor globally for IPOs and mergers and acquisitions both. If you see, a lot of investment bankers are getting sacked around the world, and private equity funding also has reduced considerably. So IPO market and the deal market has done about $60 billion of value across the world in the first 6 months, which is a sharp fall from last year. So I would not say that there's a lot of froth in the IPO market, and these IPOs which have done well are very small numbers. They're not any even mid-tier. You can say that they've raised mid-tier kind of numbers. Yes, subscriptions have been good. That shows the liquidity and the interest that is there. Anchor investors have come in and supported. So there is institutional money, and you're spot on the FIs. 47,000 crores net came in June, and that gives a big boost to the markets on the back of 43,000 crores having come in May, and that should continue because that's a trickle of the global flows. So it's not that India is getting a very inordinate amount. In fact, if you look at our performance, at 6-7% year to date, we are laggards as a market because till March end, we were actually negative, and then there's been a good rally of 12-13% from March end till June end. So overall, we are getting our fair share of flows, valuations. On our own comparison, we are okay. But on a relative comparison to emerging market peers, we are very highly valued. So right now, that doesn't matter. We are getting the trickle, and that is a deluge for us. So it's doing well. But I would not read too much into it. I would continue to stay cautious. We saw on Friday what happened with a global sell-off, a little sell-off, leading to Indian markets also selling off. Again, if you compare the mid cap and small caps, which have done very well, just take them on a 4 to 6 year basis, then you realize the performance is very poor. So it's a catch-up performance that's happening in mid cap and small caps. And small caps, I keep warning that there are a lot of interested stocks, which, interested parties are hiking up without any fundamentals. So we have to be very careful on seeing the small cap rallies. I would be happier if the quality names are rallying.
Yeah. Okay. Okay, so that's the take coming in on the Indian markets. Continues to stay cautious, but a couple of IPOs to be watched out for. We'll continue this discussion further just after this quick break. So stay tuned for more. We are slipping into a short break. Don't go anywhere. Welcome back to Your Trades on ET Now, a weekly show where we try to understand that how our experts are looking at the upcoming week and what are they factoring in. Let's now go across to our technical expert onto the show, Rajesh Palviya, and let's understand stock specific, which are some of the ideas that he has for all of us. Rajesh, over to you.
So, Srishti, first stock is from PSU Bank. Very strong buying action we have seen throughout the week for most of the PSU Bank, and so we like Canara Bank at this juncture. The stock managed to view breakout on the weekly chart, and the breakout is clearly indicating that this stock can continue furthermore momentum on the higher side towards 345, 350 zone. So one can buy Canara Bank with stop loss of 320. Another which we like, that is SJVN, Satlaj Jal Nigam. So this stock has given a breakout of rounding bottom formation on the weekly chart and strong buying action throughout the week. The breakout clearly indicates that this stock is now going to enjoy its all-time high trajectory, and we can see a target of 58 to 60. One can buy this stock with stop loss of 45. And the third stock is from automobile space, that is Mahindra and Mahindra. Most of the automobile stocks have done well in the current week, and looking at the overall setup for M&M, we do believe that this stock can scale up further higher towards 1620, 1630. So M&M is buy with stop loss of 1530.
Thanks so much for that, Rajesh. We will let you as well as Ajay go on that note. Thank you so much for giving our viewers that perspective and all of your views.